Well, folks, it is official. Elon Musk has been poison-pilled by Twitter. Now, no, even though the name is inspired by the CIA, where if a CIA operative is captured, they take a poison pill, usually cyanide, and they disappear before being able to be captured by the enemy, right? Well, it's a little different in stocks, okay? No violence here. But what a poison pill in stocks is essentially a way to prevent a hostile takeover and buy more time for a negotiation. This is the press release from Twitter adopting a limited duration, 1 year, shareholder rights plan. And basically what they're trying to do with this rights plan is say, hey, look, we're trying to buy time. That's what we're trying to do here. We're not saying no to Elon Musk's generous offer. They didn't actually call his offer generous. But I mean, quite frankly, like, look, Elon Musk is offering to pay $54.20 for the company, and just look at the max history of the chart, okay? It hasn't been above $54.20 that much. I mean, a little bit here when it first IPO'd, and a little bit during some of the euphoria of February and late 2021. But beyond that, it's almost always been below that price. But whatever, like the Saudi prince says, who wants to control our free speech, Twitter at $54.20 is below its intrinsic value, and therefore it shouldn't be sold for that price. Or you secretly want something to do with the free speech that we have in America, but okay, all right. Let's just go back to this little shareholder rights plan. And so one of the neat things is they do make it clear here, like, look, this doesn't preclude them from negotiating with Elon. It basically just says, hey, and I'm going to break down to explain to you exactly how it works, but it's basically a way of saying, hey, look, we're going to make it virtually impossible for somebody to just take over 50% of our company by just buying shares on the public market, and I'll explain how they do that. But in the meantime, we'll still be open to negotiating. This actually increases their ability to negotiate anyway. It's no surprise to me that they held their emergency meeting 1 hour after the market closed yesterday to respond to Elon Musk. It's no surprise to me that, you know, on Good Friday, where the stock market is closed, you've got this this announcement of a poison pill, essentially. But let's go ahead and go through and explain exactly what this is. A quick note, there is, in honor of Elon, a coupon code link down below for the amazing programs on building your wealth. It's CyberKevin. Take a look at that. That expires in 5 days on 4/20. And then the price will tick up again as we release a new set of content as well, especially in the Wealth Path course. That's the next one to get some new lectures. Anyway, now I'm going to give you a rough example as to how a poison pill could work. The reason I can't give you the exacts yet is because of this line right here. Additional information regarding the rights plan will be contained in the Form 8K to be filed by Twitter with the SEC. And then it takes a while for that to get reviewed and posted. So now I'm just going to give you an example of how one of these shareholder rights plans could work, or poison pills. Let's say that right now there are 763 million shares outstanding of Twitter, which there are. Last close price was $45.08. If you multiply these two together, you get $34.422 billion dollars. So this is the market cap of the company. This makes sense. It's a $34.4 billion company. So 15% of the shares are about 114 million. So if Elon Musk got to 15%, he would have to have 114 million shares, and boom, that would trigger the shareholder rights plan. It happens only once when somebody hits 15%, and then it gets triggered, and people can take advantage of the rights plan. So what does the right let you do? Well, the right lets all of the individuals who have the 649 million shares, the other 85%, to get one other share or two other shares or three other shares, TBD. They get to get more shares at about a 50% discount of the current then market value. Okay, so this is a little tricky. So to understand this, just as an example, this would mean we would take that 85% figure, or that 649 mil. Let's say everybody gets one more share at a discount. Well, then we times two, and now you add back Elon's shares, and this is how many new shares you have in total. 1.4 billion shares. So in other words, you started with 763 million shares, but now you actually have 1.4 billion shares. This means if Elon Musk still only holds 114 million shares out of 1.4 billion shares, his share in the company has gone from 15% to 8.1%. So he's lost a lot of value there. He's lost almost 50% of his stake in the company, gone, because everybody else was able to dilute him. Now, if you take this new share count and divide it by $34 billion, the market cap of the company, then the new share price would be about $24.37. And the way the math would work out would be something like this. Let's say for the non-takeover person, you had one share at $45.08, the last closing price. You get to buy another one at 50% of the new valuation, which means you're buying another share at $12.18. That means you have two shares now for a cost basis of $57.26 or $28.63 per share, which means the individual shareholder also lost some money here. They lost about 15% in value just to get this person diluted by about 54%. So everybody's taking a little bit of a hit here. Now, I think that's why they call this a poison pill, because it's not delicious for anyone to swallow. This is also why usually shareholders don't like having poison pills in place. Otherwise, companies would just always have poison pills in place. But the way the math looks when I do it, unless I'm doing something wrong, which is entirely possible, we know one thing for sure. We know that Elon's stake, this is what we know for sure. We know that Elon's stake drops. And then if he wants to buy more to get to 15% again, he would just trigger this from happening again. Boom, he'd lose again. He would just keep losing roughly 50%. Now, based on my math, and this is where I think I could be wrong, it doesn't look like the existing shareholders really benefit. It looks like they actually take a tiny little bit of a haircut as well to make this dilution possible. And I guess the thesis is, hey, well, we're swallowing something that doesn't taste too good to try to protect the company. That's the thesis. Now, where do we go moving forward? Well, there are a few things that could happen going forward. Number one, there will probably be lawsuits from shareholder groups or attorney groups that say, hey, like, Elon gave you a good deal. Instead, you swallowed a poison pill. That diluted even us. That hurt us a little bit, even though we were able to get a share at a discount. Now, maybe we're able to get a share at more of a discount or whatever to remove that 15% pain. Maybe we're able to get more shares. Who knows, right? The exact details will come out in that 8K. But the point is, shareholders might look at this and say, wait a minute, like, we could have sold for a 30% premium. And now you're just making it harder for them to take over the company. We're going to sue. That's possible, probably likely to. At the same time, Twitter could continue to negotiate with Elon Musk. And of course, Elon Musk could try to wait until next year when there's another opportunity for a proxy fight and try to collect as many votes as possible, as many shareholder votes as possible to get to 50% to replace the board. This turns into a proxy fight. It's messy. It takes a lot longer. I think the best case scenario here moving forward is honestly that Twitter bought themselves a little bit of time. Now they counteroffer Elon. Even though I think Elon's offer is great and they should take it, I would expect that they're going to counteroffer and say, hey, look, you know, if you want control of the company, fine, but you're going to have to pay us $69 a share. I don't know, or $59 a share, whatever. And a deal could be struck that way. Boom, you move on. Because the way the math looks, it looks like you're hurting your existing shareholders by having a poison pill. That's going to set up some more lawsuits. Even if you can minimize that, you're still giving up on that premium that you could be getting selling the company to Elon Musk. So we'll see what happens. Anyway, thanks for watching. We'll see you in the next one.